Hello. Good morning, everybody. I hope you guys like the new intro with some rock music.
Yeah.
Good morning to everyone. Welcome to Coffee Time with Marie Torossian, CPA. Good morning, Pedro.
Good morning, Marie. How you doing?
Very good.
Good.
So I know you guys have realized, some of you who watch us live, we had some technical difficulties, so we had to kind of push 15 minutes out, and we are back though. We are committed to delivering great content, very important information to help you guys with accounting, business, and tax strategies. So with that, again, welcome everyone. For those of you returning to the show, thanks for coming back. That means that you are getting a lot of value out of it. So thank you. And for those of you who are watching or listening to the show for the first time, give us a hands up or a thumbs up in the chat. Well, for the listeners, that won't work, but you know, we definitely want to know who are our new viewers. I always encourage you to please subscribe and like the page or the channel that you are watching us from. Make sure to put the bell if you're on YouTube, so you always know when we're going live. Of course, please share so that other people can also learn from all the information that we're putting out there. Just a brief intro. I'm your host, Marie Torossian, CPA. I am also a chartered global management accountant, an experienced auditor, and a CFO. I'm the creator of Valuation MT methodology, which is a specific methodology I use to help business owners grow from 1 million to 10 million and more. I'm also an author, and I've written a couple of books, The Complete Guide to Business Growth, and that's available on Kindle. But I'm actually going to start putting the PDF version for you guys for purchase on my website, and another something I'm working on. So that's going to be upcoming soon. I also have another ebook that's available to you, A Business Owner's Guide to Operational Accounting. And I put the link in the chat all the time in the comments as well. But if you want to go get it right now, guide.marietorosancpa.com. And of course, my excuse me, my featured guest is always my colleague, Pedro Gonzalez, CPA. Yay! Hi, Pedro. Give us your intro, please.
Okay. Good morning, everybody. And Pedro Gonzalez, business and tax strategist. We're here to help achieve your financial goals with at least three strong fronts that help all of the, regardless of the industry and size, is helping you with your cash flow. Like we said, cash flow is lifeblood of any business, regardless of the size and industry. Taxation, minimization of taxation. Taxation will erode your wealth if it's not, kept under control. And number three, exit strategy. All of us are going to exit. It's just depending on how we're going to exit, and you can take control of that if you start planning for your exit as early as possible. We have the real estate tax strategies ebook. I think the link might be shared, but it will help for those that, even if you have been in the industry, give you some ideas of other areas that sometimes gets overlooked. Even some people that have been in the real estate, we have received situations like that. People that have been in the industry and they're not aware of certain things. So
Yeah.
that's my intro.
Yay, awesome. So with the banner in the bottom, we'll be sharing different information, and then the real estate ebook link will be coming up shortly. Just a quick summary of things we've talked about in the past is, we are very, supportive of the self-employed and the entrepreneurs, because they, a lot of times, they have the biggest, drive. They want to start something new, but they don't have all the information they need to grow a strong business. And of course, some of us, we always learn from our own mistakes, but it's also good to hear those that have gone through it or seen some of these stuff, and then you can learn from it. And we are here to give you all the information you would need. So self-employed, we have a lot of material on that. Please go back and check those out. We've talked about different tax situations that have happened. We've talked about partnership agreements, buy-sell agreements, valuations, business plans. We've also had a special guest a few weeks ago, actually, talking about specifically how mortgages are handled for self-employed. So as I told you guys, we are really wanting to support self-employed individuals and new entrepreneurs and startup businesses. We've also covered a lot on the business, motivating entrepreneurs, how to set their mindset, discipline. So please make sure to go back and check some of the prior episodes so you can get the most benefit of all the content we are creating. So last week specifically, we talked about the business top line sales. So, and I know most people would be like, CPA is talking about sales, but yes, I mean, we do understand sales and we do understand how it affects the business and how important it is and how we actually use different key performance indicators to make sure we support the business owner in making decisions, right? So, and then today, we wanted to go kind of touch base on some of the situations we've been in where we've seen clients make very large, huge costly mistakes. It's cost them thousands and thousands of dollars. And this idea came because we are getting some feedback from viewers that they're telling us like, hey, after I saw your show, I actually went back to my accountant or my tax guy. I had them review this or that. I asked them questions. Someone told me that they had them sit down for 6 hours with them to go over everything yet again. I'm very proud and I feel, very happy that Pedro and I are putting content out there that's really helping you out. So this was the idea. We wanted to come back and bring as many of the stories that we have gone through and show you some of the mistakes that you can avoid.
Yeah.
Pedro, what is one of the things that's on your mind right now that we can start talking about?
Well, we were talking about, what can we, especially now that the official kind of first deadline for the taxes is over,
Mm-hmm.
mistakes that the most taxpayers make that ends up costing them thousands. I mean, and the things that sometimes they don't realize it. In what happens, and I'm gonna share something with you, is that what happens is that if you're receiving a refund, most taxpayers do not question the return.
Mm-hmm.
Say, hey, I got him a refund, and they move on without realizing that probably the refund could have been larger.
Wow.
When it tends to create a question mark and you start digging in is when you start owing. That's usually when prompts somebody,
That's true.
like that's what kind of the red alerts come all over the place when you receive that tax return and all of a sudden you owe, I don't know, 10, 20,000, a number that is significant for you that you say, wow, why do I owe so much? That's usually what happens. But at the same time, people don't realize that they're overpaying. Because, as we have said before, most of the tax preparers are just that, preparers. I'm not saying that they're bad preparers, is that their function is to take the information that you provide as a taxpayer and
Right.
make sure that they're going in the right spot.
Mm-hmm.
So again, nothing wrong, but that's what you're paying for. So unless you pay somebody to be your advisor, planner, and then dig into the numbers, so people, that's one of the mistakes that people make is that they assume that a preparer is looking for all of my potential deductions, and that's not the case. You know what I mean? They're there is to prepare your return,
Mm-hmm.
and it gets transmitted in. So I summarized about 10 typical mistakes that people make that end up costing a substantial amount of money, and one is the failure to plan. You know what I mean? So
Yes.
we know that planning is the key to beating the IRS legally. That's how you in essence enter into the battlefield, and you go with a plan of action. That's
Sure.
how you're gonna combat. Showing up, for example, now in 2022 April with a box filled with receipts is not gonna help you, and that's not tax planning. You know what I mean? That's an after the
Yes.
fact situation, and really very little can be done once that you cross that deadline of December 31st.
Yes.
So once that happened, there's not a whole lot that can be done. So planning is going to be the key. So failure to plan is ends up costing individuals a substantial amount of money, and in reality, is not as expensive as some people think. Planning, basically, what it does is going to help you in consider this. Taxation for a lot of entrepreneurs tends to be one of the largest expenses. If your Schedule C is not going to show on your profit and loss, but what happens is when you're on your tax return, it should be considered an expense of operation. So when you look into that, a taxation a lot of times ends up being a large expense for a lot of the entrepreneurs. So I think it behooves all of the entrepreneurs to attack that area. How can I reduce this expense, which is one of my largest expenses?
Right.
Because the way you're going to increase your cash flow is going to be from two main areas. One, I either increase my revenues or lower my expenses, or a combination of both.
Combination of both, correct.
You know what I mean? So now, if taxation, which again for most entrepreneurs is going to be the largest expense, it behooves the entrepreneur to maximize that area, because that area alone can significantly make a huge increase on your cash flow by reducing your taxes. Because instead of those dollars going out into the unnecessarily, you know what I mean? I'm talking about excess taxation that you could have kept into your operation, and therefore keep you not only competitive, but to be able to take a big chunk of the market, because you need, again, cash flow. That's how you combat your opponent or your competitors.
Yes, absolutely.
Yeah.
And
so
that's what, give an example here. Like, this is where you kind of can, if you know your numbers and you're planning ahead.
Yeah.
So, for example, if you anticipate your, sales are coming in really high, and you're like, okay, I got to spend some money here, but so let's spend it in the right way.
Correct.
Let's invest it in something. So, if you are considering, let's say, training your employees, that's going to have a bigger return. So then it can actually help you in, diminishing your taxes, because you're putting an expense that is a write-off. But at the same time, by training your employees, you're actually helping your business bring in more more revenue. So those are the type of discussions that you should be having and planning ahead of time, and not kind of wait last minute.
Yeah.
How much should I spend last minute on December 31, 2020 X, whatever? How much can I save?
Exactly.
Yeah.
Now, number two is the wrong expectations. And basically what happens in here is that a lot of people have this notion of, and I understand it's almost like kind of a fear of the IRS. So when you talk to them about tax strategies, a lot of people get nervous, like, you potentially being too aggressive. You know what I mean? And I tend to be somewhat aggressive in the approach. Now, I will never go beyond of your comfort level, but absolutely, if the deduction is available, I'm going to make you aware of that, and at least help you to maximize your deductions. Now, some people have the wrong expectation in the sense that they think that those aggressive tax strategies will immediately be a red flag, and that's not the case. I mean, the taking aggressive approach does not automatically. Actually, some people end up being audited by taking conservative approaches, and simply because the numbers were reported incorrectly, or somebody overlooked at the fact that the cost of goods sold, which is much higher than the year before, and that prompted a red flag, and you were conservative, but the numbers, the ratios were distorted. You know what I mean? And so being conservative is not a guarantee that you'll be under the radar. So again, the wrong expectation that, Marie, I don't want to be audited. Nobody wants to be audited. But if the law is on your side, you ought to maximize it. And as long as you are documenting your approach, if they audit, they audit. I mean, no big deal. I mean, nobody wants to be audited. But if you're taking and you can document why you took that approach, most of the time even the IRS agents and auditors will understand your approach. And not to say that they will agree 100% with you, but they understand that you took the law as it is written and you interpreted those gray areas, obviously, to your advantage.
Right. And it's something we've talked about, the record keeping that this is an area we've covered, where we went into details about why you should be, documenting even your estimates. And so, guys, I really recommend you go check out some of the information that we've covered on that, because I don't want to stop Pedro, from the list of the major mistakes. I want to make sure we cover them all.
No, but those are good points, Marie. You know what I mean? The accounting, because again, people don't realize how expensive that is when you try to be cheap on that side, it then end up costing you more. And I have seen, I can share another day, horror stories of audits when cheap bookkeeping has been done. But moving along, number three is the wrong entity. Yeah, and again, a lot of people are not using the right entity for their business. As a simple scenarios, a sole proprietor that tends to is profitable and not utilizing an S corp as an option to minimize the amount of that is being exposed to the Social Security. And we have discussed this in prior episodes, so I'm not going to go into details about this, but in general, is not utilizing the right entity. And in some cases, again, depending on the size of the business and the complexity, you can have multiple entities, meaning you could have an S corp, you could have a C corp. And I have advised, and we have done a situation where we have created even a nonprofit. And we can discuss that another day. But again, it's just maximizing the availability of tax entities to move, because every time you create an entity, what you're doing is creating almost an extension of yourself. So now you have is, instead of one taxpayer or two taxpayer, you move from sole proprietor to an S corp shareholder. Now you have two taxpayer. Well, in the case of S corp, it's actually a flow through. But then let's say you create a C corp. And again, I'm not going to go why do this, but there's reasons to also have a C corp in some situations. Then now you have as a third entity where I can legally maximize my deduction by utilizing the different in essence the different buckets where the dollars will be taxed on the C corp, some will be taxed on the individual. And again, for a discussion for another day, you can even have a nonprofit, which then you can also have some situations that again we'll discuss another day. But again, bottom line is not utilizing the right entity. Number four is retirement, and you and I have had discussions about this.
Yes.
Not utilizing the proper retirement account for your specific situation. One of the things I tend to see is this boilerplate advice that it an IRA in some cases might be enough, a traditional IRA. So no need to complicate yourself if that happens to meet. But as you're growing, you might need something else. Now, one that is depending on your circumstances, and I'll share briefly a situation of somebody that came to my office when receiving a tax notice of $90,000. And the reason was that the taxpayer in this case did not know that when they opened a retirement account was a 401k. She had no idea. And she had no idea that a 401k requires a 5500, another tax form. Well, she failed to send that tax form.
Yes.
90,000 penalty. So,
wow.
Yeah. Now, there was no reason. I looked at this. There's no reason for such a small company to complicate their lives.
Right.
401k. Now, it's a proper and the right instrument for the right type of business. But for this business, they were not utilizing it to the maximum. So there was no reason to set up a 401k, except would have been enough and simplify their lives.
Yeah.
And avoid all these unnecessary headaches.
Right. I think what they don't also mention maybe sometimes is the complication in like record keeping, the audits that have to go through some of these retirement plans that a business owner creates. And then, and it just gets really, really complicated. And if as a business owner, you're not very savvy on these things, it's better to keep it simple.
Correct.
Yeah.
And then also is the lack of communication between the taxpayers and their advisors. There has to be a communication between a financial advisor and your tax preparer.
Absolutely.
Because another scenario that I will share, some people don't realize, when you take money out of even, for example, a traditional IRA, you took some money out, so you're going to already be penalized for that. You're going to receive a penalty, especially if you missed the 60-day window. Let's assume that you missed it. Okay, so now you have this money and your intention was to return it. Okay, so what happens is
Yeah.
that now,
Loaning to yourself.
exactly. But if you missed the deadline, you cannot return the full amount if it exceeds the minimum the maximum contribution for that tax year. So let's say, for example, you took I don't know 10,000. Well, you cannot
Yes.
contribute 10,000 back. You know what I mean? After you miss that deadline, because now you're going to have a penalty for excess contribution. And again, some people don't realize that they go ahead, they missed it by a day, 2 days, and they say, okay, but here's the money. I put it back. Now they have a penalty.
Right.
And actually, the advisor should not have allowed that to happen. The financial advisor should have said, listen, Marie, stop. You cannot send that money back. Or at least you need to be aware that if you put the 10,000 back, it exceeds your limit.
Right.
Or talking
Right.
to your tax preparer to at least warn you that there's a cost of excess contribution.
Right. So it has to be set up in a way where it's not gonna, because I know that if it's actually like a loan, there's a special way that you can set it up to pay slowly, kind of, so you can pay yourself back. So I think that's something that needs to be communicated well between, when the person is taking the money.
I think I think you're talking more about a 401k. 401ks allow borrowing against that account, but all of that needs to be well understood. I mean, that's the difference, is being aware of what exactly and the consequences of missing, because even on a 401k, you miss the repayment, there's penalties for that. So it's being aware of what can be done and not done. What are the cutoff periods? So then I stay in and don't pay unnecessary taxes.
Right.
Number 5, I think. Number 5.
I'm tracking here. 1, 2, 3, 4, 5. Yes.
5. And this one is not hiring family members.
That's a big one.
And I see it happening. You're starting to have your business start making some good money. You have a teenager around, for example. It doesn't have to be a teenager, but I'm using a teenager as an example. But you having your teenager, and then most of us will start giving them money for whatever stipends for whatever they do. Well, why not hire them, take a deduction, and use those those dollars now that are already benefiting you as a deduction, and then use those dollars to pay for those you name it. I mean, the summer camp. Mommy, I need to want to buy this, buy that. Okay, but then you work for it. You know what I mean? So at the same time, mommy can now also take an advantage of the deduction against her taxable income, and now she's using is dollars that were already I'm spending before it's taxed. And this is something quickly I'm going to mention. There's a huge difference. Why the wealthy gets wealthier is because there's a difference between earning. Most of the people earn, then they get taxed, and then they spend.
Right. That's correct.
The smart way is you earn, you spend, and then you tax. And then some people don't see the difference, but there's a huge difference, because it's depending when you're taxed. There's a huge difference of how much taxes you pay, and that movement alone makes a huge difference. That's why I advise people that having a business, even as not as a full-time. I mean, you have to be actively involved, but it doesn't have to be where's your 40-hour week type of business. Converting even a hobby into a business, legitimately converting something into a business, can help you convert some of those expenses that are being paid after tax, converted, and then now I'm paying for them. My phone, some of the things are not covered by my employer. Now I can deduct them, and now those dollars are being spent prior to taxation, and then lowering my taxes.
Absolutely. And then by hiring your family members, you're basically passing on the wealth keeping the wealth within the family members, right? So it's I've done it for my son. I've made him come here and work and help me out, clean the tables or whatever it is. And he's only, I think he's 8 now. So, and he'll do it, and he'll enjoy coming to the office. It's just a different feeling, and they earn the money, and the money goes into the banks.
Correct. No, and
So they also get an understanding of how money
exactly
flows, how it's
right,
earned, and you teach them early on. So there's so many benefits other than just tax mistakes.
right, right. The number six is the healthcare strategies. Most other people understand that if you have, for example, medical premiums, uh, most of the people are going to have to put it into a Schedule A, subject to the 7.5% of your AGI, which is not the best scenario, because again, especially now that the standard deduction was increased, a lot of people are not able to,
Right,
utilize
right.
those dollars. Now, if you're self-employed and you do this correctly, you can move that those premiums and move it into this 1040 page one and use it to reduce your adjusted gross income, which is way better. But there's an area that gets missed, and that is your out-of-pocket expenses that are not now necessarily covered by your insurance. And something simple that can be done is a Section 105 medical reimbursement plan. And that can be done by any size of company. And what allows you to do is that you can now cover some of those expenses that are not covered by your insurance, your copays. You can use it to pay, pharmaceuticals. You go to your pharmacy and things like that are not necessarily covered by your insurance. So again, you're using the tax law to your side and be able then to maximize and reduce your taxes.
Those are very good, very good. Yes, health area can get very complicated.
And health is it gets even more expensive. So I think it's something that behooves everybody to look into. If you have a small business and you have medical expenses, especially high medical expenses, to look at how to reduce this. Briefly, I'm gonna quickly run through this. The other one's home office. I mean, I think a lot of people misunderstand it, do not use it properly. There's great opportunities with home office. We have discussed this in the past, so I'm not gonna go into detail. So look into home office expenses. The next one is your automobile expenses. Again, another area that we have discussed, but again, it gets also overlooked. It does not get properly utilized. So a lot of people automatically use the standard mileage deduction. But if you, for example, you have you drive, not all cars spend the same amount of dollars per mile.
Hmm.
So if you have a heavy truck, most likely is that your cost of fuel, especially right now, your cost of fuel
Oh
is
my
going to
God,
be
yes,
substantially higher than somebody driving a Honda Accord. You
of
know what I mean?
course.
So you have both individuals that both going to the tax repair one, and both are getting the standard deduction. I'm sorry, the standard mileage. But one of them, I can assure you, that is getting the short end of the stick. You know what I mean?
Yes,
Because the one that's driving the heavy truck and is most likely, if we would have used the actual expenses, would probably gotten a better deduction. But again, a lot of people don't ask, don't go further, and they take it what is given to them. It's obviously easier. Just give me your mileage and how many is your business, how much is your personal, blah blah blah. Multiply it by the rate. Right now it's at 58.5, and here's your deduction. And there's a study that is issued by the AAA. And in 2021, they estimated that the cost of driving ranges between 53 and 83, 50, yeah, something like that, 53 and $83 a mile. But when they did that study, it was in 2021, and the gas of per gallon was around 220, 230. So imagine right now when the gallon is around four or over, how much would it cost you to per mile?
oh yeah, it's yeah, I think that so the easiest way for them is to track their all the expenses and then
Yeah,
come up with a scheduled plan, and then the percentages applied to each and every trip. Might be
yeah, right,
closer to what the real expense is than
yeah,
the just taking the mileage.
yeah. Number nine, meals and entertainment. Again, I know we discussed this before, so I'm not going to go into details. But again, meals and entertainment is still available. It should be used properly. You should not be having lunch with your cousin Johnny to talk about the shopping or whatever. You should have business meetings. And those are deductible.
Yes,
Even if you're meeting with your cousin and you're talking to him or her about your business or how he or she can help, I would turn the meeting, that lunch, into a business conversation and deduct it.
yes. Yes, even and I believe also you can do that if you are, let's say, if you have specific meetings with your spouse, you go out and just talk about
Yes.
business,
Yeah.
the business situation. That specific, you know, date night could also actually
You can exactly. You can convert
actually
a
could
date
be
night into a business
a
meeting.
business meeting
Yeah.
because you are specifically talking about, you know,
Huh?
some of the business situations that you have and all that stuff. So
Correct.
definitely, it's a it's a deduction.
Correct. And the biggest mistake and the most costly of all of them is not hiring us to do your tax planning. That's the most costly.
I love it.
So there you go. Those are the 10 mistakes. Number 10. If you're not
That's
doing
a
it
good
with
one.
us,
I
you
even
are.
didn't expect you to just throw that.
But seriously, not all tax preparers and even all tax planners are cut the same way. You know what I mean? So that's, I think you can find out if you don't plan, you're planning to fail. You know what I mean? So planning is critical, and I would highly suggest that you also contact us and at least take a quick look at your taxes for the last couple of years and see if we can do something better.
I love it. I love it. This was great. So, 10 biggest costly mistakes in taxes. I love it. This is definitely much needed. I know we kind of went through it really fast, guys, but we did cover them in different
Correct.
situations and prior episodes in more detail. And actually, like for example, the retirement account, we had like a whole episode on retirement. So this was like a short list of
Right.
quick things, kind of a summary list. Just checking here the comments. We got some good mornings, so I just want to make sure that I'm responding to the good mornings. I got my glasses. Sorry, guys. um, so yeah, I mean, to our listeners and our viewers as well, like whenever you have a question and there's something that you are unsure of, feel free to send us, a direct message or an email, so that we can, answer those questions. We are always looking for information to give. And like we've said before, we don't script. We kind of come online and just talk about whatever. So I do want to make this show to be more interactive in the future. So if you're watching us live, please go ahead and put in the chat any questions you may have. So this can turn into a little bit more of an interactive live show
Yeah.
versus like, we just tell you a bunch of things and then you're like, okay, great, this great information. But it's always different when we get live participation from our viewers. Okay. And I know it doesn't work maybe as much with the listeners because we're not live on the audio, but you can still send us, a DM, a direct message, and contact us through our website, or Facebook, or LinkedIn, or YouTube, and we shall answer your questions.
Yep.
Let me see if there's any other comments coming in. No, just good mornings. Well, good morning to you.
Those are good. I'll take all the good mornings I can get. Those are good.
Okay, awesome. Um, so let's see. We are looking for some guests. So just putting it out there. So we're looking to have more guests because I think last time when we had David on the show, it was really accepted very well, and everybody was excited about having another guest on the show. So. So if some of the ideas we have here is, if you're in real estate and you have some area of expertise that you want to bring to the attention of our audiences, we'd love to talk to you. If you are in crypto, we want to talk to you as well. We could definitely cover some of the accounting and tax situations. And if you want to talk about the crypto side and what's going on there, we'd love to have that. And of course, in the law as well, business law, and there's a lot of situations that happen where lawyers and accountants are working together. So we want to bring that part of the conversation into the show as well. So if you know someone that would be interested, make sure that they reach out to us so we can have we can bring even better content to you all. So with that, I mean, we are, I think, very close to wrapping up. I know we may have gone through this show a little bit faster than usual. It was just a short list. But yeah, we want to make sure that we stay within, the time that we have assigned. 30 minutes is the max. And that's because we want to be cognizant of all the business owners that are super busy running their business. So we've given you the key things. So if you want to talk to us about these 10 mistakes we talked about, make sure to reach out to
Mhm.
Pedro or myself through social, any other channels of email. We're on every social platform that you think of, and we have our websites up there as well. So feel free to reach out. And with that, I always leave you guys with a quote from motivational speaker Jim Rohn. You are the average of the 5 people you spend most time with. I hope that we are 2 of the people that you are spending your time with. And thank you so much. Until next week, have a wonderful day.
Thank you.